Hey guys, so today in this video I wanted to explain the logic behind this trade I took yesterday, and it's order block, this one right here. We have liquidity above this order block, we build it up, had to be patient, 1, 2, there as well. And then from that we got this lower time frame order block right here. Right, see how smart money retail go long with their stops below there. We sweep that low and we then have the validated order block right there. Why? Because when we fake out to go long, see, when we break this high, people go long, put their stops below there, then this move down there is a move where smart money are buying up their positions because retail stops are being activated, right? That's logical, okay? Get it validated right there. That's our entry. Stop loss below there. Super low risk. And we let it go there. Why? Because it's the 2 and 2.5 standard deviation of our propulsion block, which is a kind of order block. Why is this a propulsion block? Because here we have order block 1, order block 2, and then we have this last order block number 3. So that's the logic behind that. Now, how can you know that the bias was bullish then? Well, we don't really have a good hourly order block to work with right now. I think we're building that up right here for continuation. But for that, we had to work with what we knew our higher time frame bias was, which was bullish. I mean, we are bullish, and the most logical draw was to fill this order block here. And I was also looking at the way we were just building up this long. I mean, if you think about it, look how every time we fake out bullishly and we sweep that low. Smart money go long. We fake that high, sweep that liquidity. Smart money go long during this move. Again, here if I drop down a bit lower. Look at this. What do we have here? Trend line. Okay, we break out. People go long. Stop right there. And smart money buy this move down here. So every single time they were buying bulls, longs, smart money. So that was I kind of looked at the order flow and how they were building a position. Yeah, and this is a highly copyable system. You find an order block, you find liquidity above the order block or within it, and then you look for the lower time frame order block from the order block, such as this one right here. Do you understand the logic here? Please comment if you don't. I'll make a separate video on that. We fake out, so retail go long. Boom. When retail goes long, there are stops there. We sweep the stops, smart money can buy. Okay, because stop loss are activated. Order block is validated. We wick above, aligning with our bias. Bias is way more important than all of this other stuff. I mean, is way more important. We could also have the same method here, right? We have order block right there. Fake up, sweep the lows. Smart money buying, right? In this order block, we have a bunch of liquidity. Okay, so now we have order block, liquidity above order block. And then we're looking for a lower time frame order block from the order block. In this case, actually was we got a balanced price range. That would have been the better like validation, which is basically when you get two fair value gaps that just are side to side is the best way to describe it, I guess. So that sweep above or that BPR would be our best bet. I didn't take this one because I like the 1 minute order blocks as entry. I didn't see it, but look at this. What do we have here? Because I wasn't fully paying attention here. This is also 1 minute order block right here. Look how we sweep this internal range high, sweep the low. So what happens? Retail go long, stops taken, order block validated, stop below there, and we go high. Even more validation, we get the 5-minute balance price range. But yeah, that's it. Look for this pattern, try to see it align with the standard deviation. I mean, if you don't know standard deviation, check my last video. But it's basically, you find a manipulation move and you extend it by 2 and 2.5. Oh yeah, sorry, I forgot to mention. That's why my target was up there as well. It's this order block right here, times 2 and 2.5. And look how scarily accurate it is on the, like, look this order block as well. Yet again, order block. Why? Take out this low, retail go short, stops above there, we go up, sweep that. This whole move is a manipulation move, displacement below. Smart money are basically buying up shorts during this move up here. This becomes an order block. We extend this one. Look at the touch. This is beautiful. Look at that. And it aligns with our standard deviation measurement. Look at that. From this last order block. Yeah, that's my trade from yesterday. Today, initially my bias is bullish, I would say, absolutely. But today is not a high probability day for me, because we haven't really been building up the orders as cleanly as yesterday. Like yesterday, you could really see how they were just manipulating for smart money to buy longs. Today, I don't think we've had that too much. What we do have is a breaker right here. Why? Smart money went short right there. So there's like right there. So they still have orders here in this, and they want to mitigate those losses now that price has gone higher. But yeah, I don't really think we built up a long position too beautifully here. So it's not a super high probability setup for me, and so I'm just not gonna take it for now. But probably what's going on is we are building up this this as our next, aligning with this. I think this is a 15-minute order block, but then most importantly, this right here is probably the weekly bias that we will sweep this higher. And so yeah, if we get a validation of this one, keep an eye out for this area here as our reversal, which aligns with this order block there, I guess. I haven't looked too closely there, but yeah, check this area out. Let's see if we get a good setup. Maybe I'll make another video. Take care. Check if you want to join my school, let me know. It's just email me, I'll set it up. All the best. Invite only.